Wake up, goddammit. Welcome to MARKETcast with Unk and Market Monk. Morning, P. How's your week?
Really good. Just kind of hit the mark with Nvidia and a couple SaaS names. Read on crypto. If people watched that last week, where I said to be cautious, that ended up bearing out pretty well. And it also, it fit something else we talked about, where the smalls are where you want to be for the most part with the crypto stocks. Going into the ETF, they had a much bigger move on the run up and the immediate aftermath. Whereas the large caps, they sort of flushed every day, 3 to 5%, and then they'd recover a bit, and then they had the big breakdown, the sell the news, cliche late in the week. So, given how much we'd been on crypto, to see the kind of the culmination of that and to get it so spot on as the ETFs came out, that felt pretty good. I didn't even trade that a lot. I had a put on coin, whatever. But just to kind of to see it react according to the read I had, that was good to see for me.
Nice. Yeah, actually, it was been kind of caught in. I don't know if it's been 2 or 3 weeks, but right around there, where I'm just getting small positions. um, so which is fine,
Yeah,
trading a little lighter around what I have, and trying to pick up things. The problem is you get a lot of positions when you do that. And this week, I kind of sensed a little weakness in the market last week. So this week I was kind of like, let's clean up some of that. But that hand was forced by the the Nvidia trade. Nvidia was making my account a move enough to mess with my emotions. So I figured it was better to clean house last week than anything. Played one penny runner, kind of a 3 day play, but again, I just went small in it. So the dip didn't really bother me too much. I was waiting for someone to ask about that in the room. But it came back around for me. Tilray ER was good, and then UNG, it snowed. Keep the thesis is simple, so that was pretty good
yeah.
as well. Um, I want to show you that chart. I got a line on that chart that just stands out, and I usually don't trust them on ETFs, but I do want to talk about that. Maybe I'll throw that in last five since I don't have much
they
there.
have a they have a 1-4 split coming up
Yeah, I hear that. I've
on the
heard that.
24th.
All splits aren't
Yeah,
bad. I know a lot of
yeah. So that
these
no, they're not. They're not.
call them
I
COVID traders, but all splits aren't bad. I mean, they have been, like, in a down market they're horrible, but yeah, all splits aren't horrible. Um, there's a couple right now that I like in the sectors we follow, crypto and weed, that I don't think are bad. Also, different topic though, Pete. Different topic.
yeah. Oh, definitely. Yeah. I just you I want to
Yeah,
get into that in the second
yeah, yeah.
second session. So I'm just making a note. So yeah, one of the reads that worked out for me this past week that I also talked about was those cybersecurity in particular, but SaaS charts that had dipped pretty significantly, and I was just looking for a retrace, back to those highs. So like Crowd and Pan W, and when they took off, they just kept going. I mean, just every day. And if you're in options, that those particular stocks and stocks like that are kind of the tech where you want to be, because the Greeks are favorable. The basically how I would describe it is that the way that they calculate the premiums for options have not are not aligned with the actual volatility you're seeing in the stock. Like, so it's moving well beyond what expectations would be, and that's what you want. You want to enter at low implied volatility and exit as the IV goes up. Um, but a lot of traders do it the other way around, and that's because they're chasing something that made this gigantic move, and then the IV drops and it kills their options. It's why I trade shares on QuantumScape on QS instead of options. It's for that exact reason, because I'm buying it after it already moved 20% sometimes. And that chart is going to go another 10, 15, 18%, but you're kind of limited on what the options can do at that point because the IV's already off the charts. And so that's a big topic we talk about a lot. you play options, you're adding a lot of complication to your trading. So if you're going to do that, you need to at least know what you're doing. And that's why like the stocks I pick to emphasize for options tend to fit a particular profile, with a few exceptions in crypto maybe, but by and large, everything from John Deere to UNH to the cybersecurity stocks, like I look for favorable setups in those, in the Greeks. And you don't have to have a PhD in option trading to understand that, but you do need to learn some basics. And so that's one of the things I try to convey.
As an options watcher, not an options trader, um, and lately I've been fishing a little bit. I've been looking, um, especially more on the covered call side. What I notice is some of them have active options, like there's some traded every day, kind of across the board, um, within a reasonable amount of in and out of the money both ways. And then there's stuff that just has like no activity whatsoever. Like there might be some in the money contracts, but there's not a lot. But when it gets moving, it gets the activity. Um, so for me, it's like one's a daily market and one's like a momentum market, is what it seems like. Am I wrong in that assessment, or is that am I just am I do I just mess with too many pennies?
You're right. And the well, I would say too that a lot of the quiet ones, I look at where are they already parked with their money. It's why I look at, like, for now, it's things in June, July, and into next January, because a lot of that stuff they've bought months ago and they're just waiting. They don't actually care if they're down 30% or something on those contracts, because they know where we're going to go from here. And Lemonade was like that.
So
Lemonade, they were.
do
No, go
you
ahead. Yeah.
do you just compare the IO, because every IO, that's open interest, right? That's what you mean by how much is out there. Do you just
Yeah.
compare that
Mhm.
across strikes? Like, how
Yeah.
do you get a
I do.
representation of what
Yeah.
what should be normal volume? That's a good question.
So that part of it has come with experience, and I can tell that for stocks that we trade a lot, um, just by looking at them. So let me just give you a quick
Because on the
example
share side, I
here.
can just go back to this 10-year
Uh,
weekly chart, right? And I can go back here and kind of see how many shares were traded last week this year.
yeah, yeah. The
And yeah, and that's a big part of just my psychology, is the volume, the activity. And it's hard to find that information quickly or in general on the history of an option. And then some of them, like I said, are just dead.
Unusual whales.
Okay.
Yeah, unusual whales has some tools to do that. So that's one thing I'd say when you really start to dig into their advanced tools. They do that, but I can just look at the like the intraday analysis page, and like something like John Deere. High open interest on John Deere's anything above 1,500, and high volume would be anything above about 250. And so, like, I already have that in mind. I look at the option activity. I look at it for 2 seconds, and I can see, is this a day where they're positioning and piling in? Is it a quiet day? Whatever. And then, so for any stock, I have some of those that we trade a lot. I have those
Sure.
numbers in mind already. Now, the other part of it is, so I look. This is where kind of the unusual part of unusual whales comes in. I look for things that are unusual, where
Yep.
it's like there's a big concentration at this contract, and so then that in and of itself isn't useful information, and that's why a lot of people lose on those alerts. They just see, oh, someone bought a ton of this thing, but there's a deeper story there. So I think my strength is being able to go in and kind of read the story that data is telling me, and just that initial unusual contract is like chapter one, and then I read from there and try to piece it together.
It's interesting. I always say a little bit of unk here. I always say price doesn't matter. It's more about the risk and the range. And it seems like you almost have to like
Yeah,
if it's like number 6 on my list, it's got to be number 4 on your list because you just the it's so liquid. I guess I don't know how else to say that, but the price varies so much. Um, yeah, that's interesting. So I
it
mean,
does, and
would
it's
that mean
also it's why
I would want to lean on volume or something else because of price. Again, you can't go. This contract's just too cheap, right? You never say that, do you? I mean, is
no,
that
no, I don't. In
okay?
fact, I actually I push the other way when people kind of I don't I mean I don't they're I say criticize, but when they groan that a setup I find has an expensive contract, and I'm like, I I know, but it's going to be more expensive tomorrow. So what do you want me to do? So it's
Yeah,
just that the setup itself demands that you buy that contract or something close to it, because you go further out of the money, it's not the trade isn't going to work. So so it's turning $600 into $900, um, and it's not the 30. I don't like to do the $30 contracts into $34 and buy 20 of them.
yeah,
I option trading for me does not work very well when you do that. So yeah, and I think too when you talk about the range and risk and all that, that's part of why I like the lower IV contracts. Secondary moves in our room is has really kind of latched onto that because for most stocks, a 1 to 2% day that's the typical move. So if that's the case, rather than trying to find the stock that's going to move 4 or 5% every day, I take that 1 to 2% move off a level I know, and that's the trade. And it's safer. You can trade more often. It's not as likely to just collapse on you in 20 seconds and just kill the contract. So that's why I focus on those, and that's kind of the theme for my notes usually.
nice, nice. No, that's a good option. Top there. Still 80-20 golden rule. Throw that out there for most of you new guys.
Yes.
Again, buy some things you believe in and go back to work. Um, Market right now, kind of. I guess crypto probably. I didn't want to do it in the beginning, but crypto probably be the best example currently. Not that I want to talk about crypto, but we can. Um,
Yeah.
I was like a week ago was like, all right, it's probably getting a little warm in here, and then you kind of followed last week with, all right, it's getting a little warm in here, probably just the smalls. Um, in general, the market, I mean, I'm kind of on that path still here. Like, although the spy candle really didn't do it this week, but there's still kind of, I mean, if I asked again, do you see weakness in the market? I think it'd be a little or yes from you now. Yeah, so thoughts on that in general? I mean,
So
we're 2 weeks in, kind of had an awkward 2 weeks with the schedule. Like, where are you at now going this Q1 action?
so yeah, where I would look, I look at like tech large caps and sort of um, where they are, and Apple uh, had this recovery back to like 185. Microsoft surpassed Apple and market cap and all that. That was kind of a big deal for me personally because I'm a Microsoft investor. But anyway, so kind of what I'm seeing is that I think that uh, this pullback and move back up is likely probably going to get rejected. I think the Apple 185 area, I think they're going to try to hold it under that and bring it back down. That's just kind of the narrative I see um, in options. You had stocks like Nvidia and Meta, like they had these big weeks. So the path of least resistance for a lot of those is, I think, going to be to um, to pull back a bit, and that certainly could create some weakness. Strength in oil tells me that we might see some things rotate to that, and that'll pull back some tech too. So yeah, there's definitely kind of a story in the options that the upside's going to slow, and the longer it kind of stagnates, the more likely we do pull back. So I'm with you there.
Yeah, it feels like, well, my first impression on the ER that, we're back to the money matters again. You can have debt as long as you have cash flow, cash on hand. You can't have debt and not have cash. It's just, and which is kind of weird to me that we're going into a year that money's gonna get cheaper, rates are gonna get cut, and we're overly concerned about it so far. So I'm a little bit of a, if there's gonna be pullback, it's gonna be through these ERs. But what you said about um, tech, like CrowdStrike, I think we're in the same scenario again, where the A's kind of like, they really jammed from our September to January thesis. Like that was the time for them. It's going to be like the B pluses and the C's and the B's of the sectors that are lagging a little bit, that will probably come out of the other side of ER and do well in the first 2 quarters of the year. It's kind of how I'm seeing it. Like there's a bunch of other semiconductors besides NVIDIA. I'll just come out and say it. There's a ton of them, and they're all pretty much way down if you look on them at a 3 or 5 year scale.
AMBA's the one I've been on.
Yeah, I know you have a few.
Yeah. And yeah. So that definitely, I see that in the whole SaaS world too. And one of the things I said this week, and this is kind of a vague statement, but I'm like, look at stocks that basically like used to be $280 to even $400 that are trading at 50 to 85 or something like that. And I what I see in those is I see the leaps for Twilio 120
sure.
or something like that. So those fit that kind of profile. And I think for me, NVIDIA, I had it last week. We've been on it a long time, but like for me to mention NVIDIA option side is somewhat rare. Maybe once every couple months I'll talk about it. And we're just, at a point where it makes a move like this. I think you do want to kind of step back and wait. If you're in it, share side, you're golden. That's all good. But option side, I do look for kind of the Twillos of the world as the ones to, be where my attention should go in that sector.
Man, shout out to the sliding in the NVIDIA Netflix contract there, right on third base. I had that thing in my damn notes forever to talk about because, for one, I like to get the free flow read. I ain't gonna lie, I like free flow reads, and two, it just seems like that's a good topic for most people. Like that's a 10 out of a 10 when we talk about that, right? Everyone knows NVIDIA and Netflix. Oh yeah. So it's a good topic. Yeah. But I remember when just toot a little encore. I remember when we were back here talking it, and I was like 350, and then we got like that's where you just are gonna make a decision. You got to give yourself some room on these big swings, and then a week later it was either 400 or 500 where we were gonna be, and then we just had good consolidation for a long time, and yeah, this thing. I mean, if this is another chart you talk about, let me go this way. No. Like, it's not done yet. This thing ain't going to be done yet. Oh, it doesn't have pre-split. It doesn't have the pre-split. Moo has pre-split. If you go off pre-split, it's 800. That's the number you want for this thing, though.
Yeah,
it's always 800 here.
And then the other big name for me, I've talked about it as a barometer for a long time, is CrowdStrike. And when I actually kind of abandoned my bearish thesis to close the year, when CrowdStrike, I think it was like $200. I was like, we get to $200 on CrowdStrike. I think, we are going to hit that high into the end of the year. And then, it's blown right through that and just took off. And now all of a sudden, you're kind of toying with all-time highs. And I brought up, could be 300, could be 320, whatever. But, and I would say for these, when you see a stock like this up here, the temptation to say, I'm going to buy puts now. I would encourage people to avoid that, because I think you need a better reason to buy puts than
Sure.
to say, oh, the stock, it it can't go higher. It's run up here. People tried that with SMCI all year and just kept going. So there's a scenario where that happens. You want puts, find some real weakness, and I can help with that. But I think just looking at a lot of this tech in the cybersecurity, SaaS, all that, it can definitely slow down. It can pull back. Kind of hard to time that, and just not the best approach to just go in short just because you think stuff ran too much or it's too expensive.
Dude, my problem here was it never checked back down to this 130 level when I wanted to buy it. So I had to overpay for
Yeah,
it.
yeah.
I had to overpay for it, which means I got a smaller size, which means I exited a little bit early. But yes, good chart. I like the company too. Um, I wish I wouldn't have messed that one up, to be honest with you. I had some. Oh, the this is a good one. So this one is kind of already, it's done its thing. Maybe it's not the best example, but
Yeah.
it'll be a decent example. So I got a math problem that you should just apply. Most people can apply to get a good rating on a stock. And we talked to IPO, so this is kind of a freebie for everybody if you're listening, if you're not in the room. But take the years the stock is, like, let's call this one year, 2 year, 3. Let's call this 4 year to make the math easy. I don't want to go 5 year or 4.5. So we'll go 4 year, and then you want to take the range it has left. So if it has like 100% range, so let's say this was 150 still, and it could go to 300. So a 100% range left. So you just do a math problem there, and you divide the range by the number of years. So this is a 0.25. So you want things
Yeah.
a little bit newer. You want a 3 year chart with like 300% range, because that's going to be a 1.0. And the bigger the number, the better the setup.
Right.
Closer to 1 is what you want. But that's what I'm looking for. It's a damn math problem right now. Simple as I can get, P, on that one. And you kind of touched
Yeah.
on it, but that's the charts you want to look for. And then you want to add like some, like a good example. We always talk about buying a car. Okay, you want a car. All right, you got a car. Well, what you want, a 2-door or a 4-door? Do you want a tech company? Do you want an oil company? What do you want? Do you want it to be red or black? Do you want it to be American or Chinese? Like what kind of
Yeah.
car do you want? So add those extra check notes to each one of them so it lines up well with you. But yeah, I think that's where the money's at, going into the year for sure. But it's a math problem for me. I don't know about you, because I don't want to wait around, right?
And this is, I think where people get in trouble trying to do this is they'll look at like Lucid,
Yeah, no, don't do that.
$3, and they'll be like, oh man, imagine if this goes back to 12. I'm gonna buy it at 3. I'm gonna sell it at 12. Yeah, there's more context to it than that, and so it's why there's better EVs, maybe better sectors to look at to get to what we're talking about.
There's a good
Than
one. There's a good one.
to just buy a helpless chart. Oh yeah, yeah.
That's a great one. I mean, I like our levels better. Don't get me wrong, but still, it's a $41 stock. It's got a 180 high. So what? You're like 250 on the percent, and it's a 3-year-old chart.
Yep.
So you're like 0.75, 0.8 in that range, somewhere in there. Almost a 1. A 1 is balling. Anything over 0.5 is
Yeah,
worth a look.
and this is why when I was talking about that that IPO session, I tried to say like something from around 2020, and even if it's older, like that it made that huge move back then, and then came down, and we're kind of resetting and potentially moving back up. Because you get like a really old stock to me that has a lot more, I don't want to call it like baggage, in terms of
Sure.
where it is in the price, all that history, and
Yep.
it can cloud the picture. So I like Ford it's a completely different conversation than what we're talking about for why I like it and what I think it'll do and how I trade it. But when you're talking kind of the meat and potatoes of where your profit's going to come from this year, I think it is this setup that we're talking about.
Oh yeah, float will matter there. When you mentioned Lucid, that's the first thing that came up in my head too. Well, float matters
Yeah,
in general.
yeah,
There is some negative.
yeah.
There is some negative sectors. There is some negative stock factors too. So for sure. Um, oh, do I save that? Do I save that? Yeah, I'm gonna skip
And
that.
even
What?
within, I'll mention oil because I want to kind of
Yeah,
transition
do
into
that.
mentioning
Do that.
oil real quick. Anyway, but so Exxon and Oxy, you're not going to 100% those, um, but there are oil stocks where you can, and so that's where like the SD of the world, uh, that's where they kind of come back in and rig and stuff like that. So as the people who follow us and look at our plays and everything, like when I talk oil, there's a lot of different types of oil setups that kind of come into play, and with what I think is going to happen with the sector, you will probably see me start to mention some more of the smalls and mid caps, whereas my initial focus has been on getting the 5 to 8% on Oxy and Exxon that I think we're going to see, and then yeah, just so oil prices, as far as that goes, we never broke down past $68. That was what I said would be where I would just completely step away, and now we're back up 72.60, kind of looking to move into that 76, 78 area, and then we kind of go from there. So I think we kind of weathered the worst of it in oil. There's some geopolitical reasons it could spike this week, so I would, if you're in those names or if you trade those names, I would certainly give it some extra attention this week.
Yeah, no, it seems like that's a matter of time. I don't want to get back into talking politics, but it's probably going to be forced to this year. um,
Yeah, yeah.
let's hop into Spy. We've been going 40. I'm trying to keep it on 30 today. So let's hop into Spy. I had more downside than you last week. We didn't get the downside. Maybe a little more, a couple bucks more to the upside. Pretty resilient chart. I didn't really look at it much unless Goose made me. Um, but anything I've seen is super, super resilient, especially on intraday. Holds very, very, very well. Yeah, look at that.
Um, it just won't break down below the pre-market low. It just won't do it. So that's really tough short, and I know a lot of people just keep getting smacked buying puts on it. I think I mentioned last week. I thought it was plausible that we would retrace that dip. I didn't think we'd go as high as we did, but what do
If
you
you're
think about this 480 level?
Well, I got a question around that because we'll kind of it'll
Yeah.
answer. I'll answer your question with my question. Is it easier to short 480? Like if you're a patient trader, you only need like one trade a week, right? You can wait for the perfect setup. You're just smoking cigars in your office, right? You're that guy, and you're like, I just need one trade, make
Yeah.
a couple hundred
Mm-hmm.
bucks. I could take the wife out to dinner. These guys are cool. Um, do you short 480 or do you buy calls off 470? Which one's better right now? Like which one's leaning? I mean, it's got to lean one way. Which one would be easier to trade?
Well, to me, it depends on what brings us to 470. If
Okay.
it's quick, it's like a kind of like a flash crash, then the calls off 470 are easier. If it just sort of slowly bleeds out to 470, you might not have much of a trade there, because I think it could just lead to some kind of quiet consolidation. So I would say, to me, the shorting at 480 is better, because if you're someone who's doing that, you probably have some, you're sort of a smart trader. You probably have some longs that are at a good a good average. So if you're wrong about your SPY trade and you get out of it, it's not gonna kill you. You have a lot of stuff going up anyway. So yeah, I like
Okay.
the shorting at 480. I think probably is the better of those two scenarios.
Yeah, because I mean, it's obviously it's gonna take something to get through there, and if we're in, I mean, I've said it for at least since Christmas, and I think you've been on board at least that long. But we're just gonna have more broadening. I mean, that's the overall thesis. Some of these charts, I mean, they can go higher, but they're gonna consolidate, need a reason to go higher, and then they work their way up. It's just a slower process. But in the meantime, if the overall market SPY is going to go up and not consolidate, we're going to have a strong broadening. And I think that's what we're currently lacking. So we kind of have this sideways consolidation. It's just how long are we going to do that for? And the chart I'm looking at, it's been a month. I mean, SPY was, if we go back to this candle here, that was the 475. You know, we're right there. That's 1218. So it's been about a month. We have been consolidating just with enough range that people don't call it that yet.
Yeah, I'm with you there. It So the all right. So the as far as the option contracts go, the ones that kind of have my attention, September 405 puts
Jesus.
are they're about it's about $500 right now and has about 126,000 open interest. So it's in the top 10 of open interest contracts, and most of the open interest is concentrated within the next 3 weeks. So it's the one that stands out that's kind of longer range. And when we look at a contract like that, given the time on it, we don't have to get anywhere near actually going to $405
Sure.
for that trade to work. So then I'm like, okay, so that's the one. And then what is sort of closer? And that'd be 216 450p,
There you go.
which I also don't think we get there. But again, entering that now, if we do pull back to 470, 468 over the next, I don't know, 5, 7 trading days or something like that, you will those trades will do very well, and they are ask side, so they have enough time to where we could make that move to 480, but we could see a pretty hard rejection there, and then they'll pile into more of those. So those are the two contracts I see that lean me towards a little bit of a pullback this week.
That 405 out there in the distance seems like the red black trade for we're going to have some sort of world event that the market's going to react negatively to. Just a little hedge on
Yes,
that,
yeah,
right? I mean, that's all that seems like to me is like that's just some insurance just in case we have a event over the weekend or overnight. They can't wake up in damage control. They'll already have their damage control insurance. Um,
yeah,
the
absolutely.
the
Yep.
450 really does stand out to me, P. It's on. I mean, the 1 year probably is the easiest to see it on. It's a little higher than 450. It's 454, 455, 457, somewhere in there. But you can see it on the big time frame. This one will be easier to get a number. 459. So yeah, 460 kind of stands out as possible. And again, we're still in that spot where if you go 480, 460, 480, 455, the sky will be falling on the talking heads on the news and on Twitter and stuff like that. So um, I just think we have another 3 or 4 candles up here before we do it. Think it's healthy if we do it. The only way we don't do it is if the market agrees with the Feds and the politics stay clean. But I'm not betting on that side for sure.
Uh, I'm really just sort of, when you look at what's in SPY and what moves it, it's a little easier for me to see Apple downside than a
Yeah,
couple of these other ones. Even though, like, so Microsoft being at 388, I really am curious what it's going to do at 390 or potentially like 395. And if those are going to make moves like that, if Nvidia is going to continue, it limits how much SPY can pull back just because of what's in it. So I'm probably looking for weakness in those names first before I get a clearer picture on weakness in SPY.
100%.
But I will give you some. Let me give you some numbers. All right. So I've got looking at some of these candles here. I'm gonna say 471.
God.
38.
Okay.
And I'll just say 480.32 as my
480.32. All right. I said Jesus on the first one because I took this number by my bottom. I was gonna go the 69, but I thought it was a little too low, so I took 471.99, which is 60 cents off of your bottom. So we had the same bottom look there.
Yeah.
And I thought about going into the 80s. Just a lot. There's a lot going on this week, so I think I'll kind of be washy. So I just stuck with this number right here. This 478.50. This top guy right here. So just kind of staying inside the box, I think. Tradable, but some stuff is going to just be a waste of time. Because it's not going to do nothing this week. Or it's going to have a nice, what's I don't even know I really don't know the theme lately, but it's that one where it kind of checks down all week and then has one good day Friday, or it goes up a little bit all week and you come back down on Friday. I think we're back in that goddamn market in general, without a reason to trade.
Me too. And I don't trade SPY much, but I especially don't like to trade it on the 0.4% days. It's just not much there for me. When you do get like a big flush and recovery, I watch it, but there's better stuff for me. I'm not much of an SPX trader. I know those contracts go crazy, but rarely do those. So yeah, I'm with you.
Yeah, no matrix.
So yeah, I mean, I think one difference with us as a room, boring days, kind of can kill a lot of your gambler traders. Because they are so option focused, but boring days and boring stocks for us are an opportunity and a chance to sort of read things while the market's quiet, and you're making next week's money on days like that. And that's how I like to look at it.
A boring stock on support with solid flow reads. We're a little more detailed than that. Our car isn't just a car. It's a 4-door.
Right.
They're not 20, they're 10s. We keep them clean.
Yeah.
All right. You want to get to work, P?
Yeah, I'll grab a coffee and we'll
yeah. Like and subscribe and follow us for more. Sorry, I had to get that in there.
Oh, yeah.
All right.